If you're still struggling to get business funding, I'm going to show you the best lenders for you to look at if you're bringing in revenue. And the revenue, the maximum amount of revenue you should be able to show is at least $5,000 a month. Okay. Now, with some lenders, they may want you to show almost $10,000 a month, but I'm going to break it down because all lenders are not the same. Okay. And this has nothing to do with your Dun and Bradstreet or your business credit score. This is all lenders that focus just on revenue. Now, the first one is Axion. Now, many of you all hear me talk about Axion. However, you never really understand the whole process. So with Axion, you see that they go from 5,000 um, on up to 250,000, and the minimum credit score is a 620. The time in business is at least a year. Minimum revenue is $100,000. Okay, and so for people, that's what about $8,500 a month. So again, they're not looking at a lot of revenue. Now, here's the pros and cons of it is that they have better interest rate, no prepayment penalty, business advising and development. So meaning that they will help you actually grow the business. Now, the cons of it is that when you get a loan from them, they may put a UCC lien. And so when other businesses look at you and they see that you have a UCC lien on your business, sometimes they don't want to deal with you. So this is where your traditional banks and stuff must come in to be able to get you qualified for funding, even with no revenue. Okay. But this year is focused mostly on people that are struggling, don't really have that perfect credit score, but do have strong revenue that you can get funding. Now, next one is Giggle Finance. Many of you hear me talk about Giggle Finance, and as you can see here, all you need is a 300 credit score. So meaning that credit score doesn't matter, but you have to be in business for at least 90 days, and minimum annual revenue is about 18,000. So basically anywhere from 1,500 to 3,000. All right. Now, the thing about it I like about Giggle Finance because they deal with high risk type of businesses. So if you are a truck driver, if you're in real estate, if you are MLM, they're willing to give you anywhere from 15,000 up to 20,000 for reoccurring clients and stuff like that. So that's the best thing about them. Now, again, with some lenders, if they see Giggle Finance on your credit report, sometimes they may not want to deal with you. Again, here's the secret that I've been telling people: be careful how you build your credit file. Because if you have a lot of subprime lenders on your credit file, a lot of traditional banks and credit unions do not want to work with you. Okay. So looking at the pros and cons, like I said, credit score doesn't matter. Same day funding does offer prepayment discount. So if you pay it early, you can get a discount. Now, again, change the origination fee, charges origination fee. So when you get the loan, say you get a $10,000 loan, they may charge you a certain percentage, some up to 10%. So if they give you a $10,000 loan, they may charge you up to $1,000 for that $10,000. Okay. So another thing is they don't operate in California, New York, or Oregon. All right. So these are some of the things that I would definitely tell you when you look for lenders, you have to be very careful. Now, you have iBusiness funding. All right. So iBusiness funding, they took over from another lender. I can't think of them off the top of my head, but as you can see, they want you to have minimum a 660 credit score, been in business for at least 2 years. Now, annual revenue, look at that. It's $50,000. So there you go. When I tell you a lot of these lenders, long as you producing at least $4,300 a month. Okay, so you're not having to make a whole lot of money, and so loans can go from 2,500 up to $500,000. Now, like I said, the con of this is that you have to be in business for at least 2 years. Okay. And the minimum credit score is higher at a 660. Now, here's another thing that I like about this, because if you have a 660, when you get this loan, it doesn't show up on your personal credit. That's the number one. So the capital you use for this loan, uh if you have a high DTI on your credit and stuff like that, you're able to leverage this capital to pay down the personal credit to get the credit score up to get a better loan from the banks or the credit unions, or even get 0% credit cards. I always tell you, like Wells Fargo, US Bank, they actually give you 0% credit cards anywhere from 12 months up to 21 months, and then you can liquidate those cards as well to use as capitals for your other investments. So this is definitely a good strategy to use. Now, you have quantum lending. All right. Now, quantum lending, what I like about them, look, they offer a line of credit. Okay. This is the best type of loan that you can have. Hands down, if a lender offers you a line of credit, take it. Okay. Now, the minimum credit score is a 680. So that still leaves room for you not only to get this here line of credit that doesn't show up on your personal credit, but also leverage this line of credit to help you pay down your debt. Plus, with a 680 credit score, now you're still able to get lines of credit from like Wells Fargo up for $50,000. Okay. You can go to DreamSpring, another nonprofit that offers lines of credit up to $50,000. As a matter of fact, put it in the comments and I'll make a video on all the best places to get a line of credit, because that's the best type of leveraging you can have. And again, see the revenue? All you have to do is have minimum 50,000, so $4,300 a month. So you're not looking at a whole month. Plus, all you have to be in business for at least a year. All right. So yes, they do charge origination fees, but this is a line of credit. Okay. Yeah, and it's high. That's the reason why I'm saying leverage it to be able to pay down your other debts to get qualified for higher limits of, like I said, 0% interest credit cards. Now, you have Headway Capital. Again, you see here with Headway Capital, all you need is a 625. Been in business for at least 6 months. Annual revenue, minimum $50,000, $4,300 a month. So you don't need a lot. Okay. Now, there's a 2% draw from them. It's a line of credit as well. Again, the line of credit is what you want. That's what you want. All right. They have a flexible qualification requirements. So what that means is that you may not have the best credit. Okay. However, you may have higher revenue. You may also have some type of assets that you can attach to the business that they can put a lien against, so that way you can still qualify for that line of credit. So that's the reason why I like it. Now, unfortunately, they are not in all 50 states, but again, it's all about leveraging. Now, you have Fundbox, okay? And so with Fundbox, again, they are a platform, all right? So with Fundbox being a platform, 600 credit score, in business for at least 3 months, revenue 30,000 annually, okay? So that's even less than $3,000 a month, all right? Now, here's the thing about it, you have to be careful, is that some of these companies, the origination fee is what hinders people. And with Fundbox, they may use a UCC uh, lien on the business. So if they see like you may have a Giggle Finance, then they may not want to give you a loan. It just depends who's there first. But at the same time, with minimum credit score of a 600, minimum revenue, this is definitely an option for you. So trying to figure out, where do I get a loan from? Do I need to go to the SBA and stuff like that? It may not even be necessary. It just depends on what's the project. If you have any questions, needing more funding resources, analyze your credit report before you applying for loans and stuff like that, you need to check us out. Visit Three Way Funding or HoustonMcMiller.net